Hello, this is the tradesight U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning Monday, March 2nd, 2015, and ending Friday the 6th. We had a good trading week this last week. Charts, as usual, brought to you by eSignal. Let's take a look at the ES front month futures contract to start. I want to point out a couple of things. First of all, we got that 13 sell signal back in a couple weeks ago, and that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 days back. That gave us the pink risk line. Now the risk line is interesting because that's the line that should contain the market as a last resort from that sell signal, and it has so far. But what's interesting is we technically, the way that the risk lines are invalidated is if you close above them and then trade above that day's high the next day. Technically, we did do that because we closed barely a tick or so above the risk line. That's that white candle you can see, and the next day opened up and kind of trade above that. But largely speaking, we have not closed above the risk line. That one day by a tick, and that's it. That's a minor breach of the technical risk line. And other than that, we have been rolling over very slowly here. Volume's been weak, but I would make the argument that the 13 sell signal and the risk line are still very much in place. So let's see what we get from here. We'd like to see volume pick up, obviously. We've had some volume issues. We'll look at that in a moment. We also have completed, one day after that 13 sell signal, we also finished a new 9-bar startup phase, which is the green 1 through 9 count. And because of that, we're already 7 bars into a new seeker sell signal potentially. So even if we do start to head up, we're going to get another sell signal here shortly. Now, if you look back, you'll see that there was a 13 sell signal back in November around Thanksgiving. That led to, you can see the pink risk line there. That led to a rollover in the markets in the middle of December. And then we came back up a bit. December was kind of choppy. We rallied a little bit in February here. We've got this new signal. So if we get either one of these signals, one of them should bring in. It's hard to imagine how we're going to make a run in the market to the upside with this signal looming and another one behind us. But we will see what happens. Let's take a look at the Nasdaq. This is the NDX. Nasdaq 100 has a 9-bar startup phase, but it's only 3 bars in. Look how flat this last week was on the Nasdaq side. Really, really, really flat. Last 2 weeks have not been superb. From a trading perspective, which is fine, we don't expect, not every week is. That's the way the markets work. Got to have your system set so that you don't get hurt during the poor trading weeks and take advantage of the better ones. Here's a look at the SOX index, closed near the highs this week as well. Here's the biotechs, lost 36 points almost on Friday. It's down off of a new closing high the prior day. Google broke out for the year, up since first new high since January, and approaching a 4-month high basically at this point in time. Apple, on the other hand, down 2 points, coming back in from those highs and down for the week. We look at the VIX, closed Friday at 1334. It was down a little bit, and you can see that it's at the low of the year essentially. It does have a new 9-bar startup phase. It's amazing how well the seeker technicals have worked on an index like the VIX here. Oil was actually up a buck and change on Friday, but that only took it back to 49.76. So we're in that $40 area on crude oil. Here's a look at the gold contract, was up a little bit today, and then here's the trend. Now, the 10-day trend has risen, but remember, the same point we got that 13 sell signal, we also got the moving average on the 10-day moving average on the trend was under 0.85. That's also a sell signal. So it's really hard to see the market climbing from here. Now, we are in the middle of this potential partial government shutdown over the Department of Homeland Security and all the junk that goes with that. And that does tend to hurt the market a bit. It just, things stall out while people wait and watch how it gets resolved. And that might explain some of the lighter volume that we've been seeing. So this week, volume was back up a little bit. The prior week, which was the shortened President's Day week and is often a holiday vacation week for traders, you can see we had some very light volume, under 1.6 billion most of those days. And then this week it was back above 1.6, but nothing really got to 1.8 even, which is a more normal number. Anything above 1.8 is considered good trading conditions. So we've had 2 weeks in a row of lighter volume. We haven't been able to make any progress either way in the markets because of it. So that is that. Let's take a look at the ES front month futures contract. We're going to go in 10-minute bars so we can see the whole week here. And just to point out, high to low is only 18 points on the ES for the whole week. Now, it usually trades 16 points per day on average. So 18 points for the week is only 2 more than the average for a single day. It was a very, very contained week. We had 2 days where it was basically a 5-point range. So you can see Monday we had a little gap down. We did come up and not fill that quite, but we filled it Tuesday morning. Tuesday was a flat opening. We rallied a bit, pulled back over lunch and closed. Tuesday was probably the widest range day of the week, which is sad to say when it was only about 12 points. Wednesday we opened basically flat, maybe a minor gap that we filled over lunch. We tried to press the highs, and then we rolled over and closed about even for the day. Thursday we opened flat, closed down a point or two. Friday we opened flat. Remember, Friday was end of month and a Friday at the same time while worrying about the government shutdown. So not much happened on Friday either. Here's the Nasdaq Futures, not much different. Remember, I showed you that NDX chart, how flat it was this week on the daily. So here's a look at the Nasdaq NQ Futures. High to low here, only about 32, 33 points. Again, that's about daily average on the Nasdaq. So it was a very narrow week, and you have to adjust accordingly. You've got to take advantage of when the market's moving and make sure you don't get hurt when it is not. All right, so let's take a look at the data that's due coming out this week. I did want to show you one other thing really quick, actually, before we get to that. Let's take a look at the S&P chart, not the daily, but the monthly. I want to show you this because this goes back a ways, obviously. This version of the chart goes back all the way to 1997. Now, what's interesting about this is we have not had a 13 sell signal or buy signal for that matter, any signal completed since the 1990s. The last one was in 1999. We had a 13 sell signal on the S&P in the middle of the year, and it kind of caused a top on the S&P. Here's a look at the index. And what you can see is that we've just gotten a 13 sell signal about a couple months ago on the index, and the pink risk line, which would be, again, the wall that you have a hard time getting through, is right here. This is it. We're just closed at it for the end of the month. Now, remember, each of these candles is a month. So that means what? That means that each bar, in order to close above that risk line and then take out the high of that bar. So at this point, since we closed below the risk line, it's still the wall. We would have to close above it at the end of March and then trade above that in April to negate the signal. Otherwise, the signal is in place. This is a big, broad signal on the market. Okay, this is a huge deal. Remember, again, we haven't had one since 1999 in the run-up. So again, a little less precise. It's not, the monthly signal. It doesn't mean the market's just going to roll over, but at the same time, it's a bigger signal because it's on the monthly chart. And we got the signal back in the late last year in September, and we've kind of been walking up anyways, running into that risk line. But in general, that might help explain why the market's having such a hard time at this level, because it's really got a broad market sell signal that it's trying to put into effect. If we do, the target of that signal would be that red static trend line that you see down there around 1340, which is a pretty big pullback, of course. But we've had quite a run in the market over the last few years. Obviously, we probably deserve some sort of a pullback, and if we've got this signal, at least whether it leads to that red line or not, it's still something to keep an eye on. All right, let's take a look at the economic data coming out this week. We got on Monday, personal income and spending, PCE prices, ISM index, construction spending at 10 a.m. Those are 30 minutes into the market. On Tuesday, we've got auto and truck sales at 2 p.m., and that is it. So Tuesday is the lightest day of the week in terms of economic data, but this is a busy week overall. On Wednesday, we've got the MBA mortgage index, we've got ADP employment change, we've got ISM services, crude oil inventories, and the Fed beige book in the afternoon. On Thursday, we've got Challenger job cuts, the weekly initial and continuing jobless claims data, productivity revised, unit labor costs, factory orders, natty gas. And then on Friday, now here's the big one, we've got non-farm payrolls, which comes with the unemployment rate. That's a big number by itself. But we've also got trade balance, which is a big number by itself, which is interesting because Fridays tend to be a little slow. But to have that much data, we can at least get some kind of movement early Friday. And we've got some data right out of the gate Monday. So this week versus the last few, if Friday was about window dressing, it was holding the market in place for the month-end statements. Maybe we get some resolutions soon on the budget situation out of the Department of Homeland Security through Congress. Now that we've gotten free of February and the weather's kind of changing a bit, not as many people frozen at home, maybe we can finally start to get some of that movement. And again, a lot of sell signals in place in the market. So again, a move to the downside could actually turn into something much more interesting, make us a lot more money on the short side. But there's data throughout the week except for maybe Tuesday. So there's a lot of reasons that we can be moving and hopefully get some better volume and better price action than we've seen the last 2 weeks especially. And then even Friday for the first half of the day, I'd be optimistic to see something with all that data early on. I'd like to thank you for listening. Charts, as usual, brought to you by eSignal. If you find our videos useful, please like them on YouTube. If you haven't taken a trial of our services, you can. We can help you make money in the markets. We also offer a 6-month stock and a 6-month futures mentorship program where we work with you every day and teach you everything we can about trading those particular asset classes. You can inquire by using the contact form of our website. Have a great trading week.